Guys, welcome back to Toto Capital. My name's Liam, and in this video, I'm going to show you guys the most profitable strategy when it comes to trading ranging markets. Let's jump straight in. This is USD CAD in the FX markets. However, this strategy can be used across all markets, whether that's crypto, stocks, FX, you name it. This strategy can be used when trading the markets. Okay, let's just jump straight in. First off, head over to the indicators tab situated to the top end of your screen here under indicators. Then if you type in fractals, okay, fractals, and it's this one here by Rachel_T. Add that to your charts, add that to your favorites. This indicator comes in very, very handy. Okay, unlike a lot of other indicators, this does not, it's not a lagging indicator. This is an indicator that uses the most recent price action in order to forecast our outlooks and projections and allows us to spot areas of liquidity within the markets. So let's just jump straight in. This is USD CAD daily time frame. Okay. However, our execution time frame is going to be the 4 hour. So keep that in mind. So the higher time frame is the daily time frame. And what I want you guys to do is mark on your most recent fractal high and most recent fractal low. So this is the most recent fractal low here, indicated by them up arrows. And this is your most recent fractal high, indicated by this down arrow. Very, very simple. So essentially, these are the areas of liquidity where price is going to be looking at raiding, using this as liquidity and fuel in order to drive the markets into the correct direction. Okay, so this is where retail traders are going to be trapped in the markets, and therefore we're using that to our advantage to base our trades off of these levels. Okay, so some people call these key levels. Essentially these are points of liquidity where buyers and sellers are going to be very active within the markets. Okay, so now that we've identified our most recent high and low fractal, this is essentially the range that we're dealing in. So, this is our ranging market here. This is the dealing range. Okay, so let's mark on our zones. So you've got this zone here down at the bottom, and it's important to mark this on up to the candle opens. Okay, so you can see from the low up to the open, this is our bottom end of the range. And then likewise, we can do this for the top end of the range, and let's mark that on. Okay, so very, very simple. These are our areas of liquidity. Now that we've marked that on our chart, we can drop down to the 4 hour time frame and look deeper into this trade. Okay, so this is the trade. This is the range that we're currently dealing with. So if and only if price comes to the extremities of these ranges, i.e. down at the bottom end or the top end, these are the only areas that we're going to be looking at executing within this market. Okay, so let's play price on and look at exactly what we're seeing here. So, okay, prices came down to the bottom end of this range. What we want to see is a deviation. Okay, this is extremely important. So you don't want to go blindly long in off these key areas. However, what you do want to see is a deviation. And what is a deviation? It's simply when price comes down below this key level, violates below our swing range low, and then we can get a close back above the open of the daily swing level. Okay, so we've seen price come down, manipulate these traders into thinking this market's going to go short. Ultimately, that traps the retail. Retail are going to go short in this market. That allows us to use that as fuel to long off this area. Okay, we can use their stop losses as fuel, and also, because in order for institutions to move the market long, they need a lot of sellers to be jumping in these markets. Okay, so for example, retail are going to be entering short on this breakout. That provides the fuel, so all them sell orders can be matched up with the institutional buy orders in order to actually move this market into the correct direction. Okay, so we can classify this as a deviation once we see the close back above. Once we see that, we're going to look for a retest off this area and then we can look for a long trade. You can look to target around the mid-range as a first target, and then ultimate targets are going to be back up to range highs. Okay, so that's the strategy. Let's look for our order to be popped in the market, and we need a mechanical rule-based stop loss. Okay, so stop loss needs to go below the zone. Give it a little bit of room to breathe. Order, you can have a first target around the mid-range. You can see that ties in with some of these horizontals here. Let's mark that on a bit more accurately for you guys. So you've got a mid-range sort of coming in around here, 1.37200, and then you've got the range highs back up at 1.37800. Okay, so let's see if we get triggered in this trade. Okay, price is just playing around, comes down. You can see we're tagged in this trade, and price is starting to react and hold above this level. So this is exactly what you want to see. Okay, so you've seen the deviation, you've seen the reclaim, and you've seen price starting to sort of accept this level. Okay, that's a great sign that we're going to look to continue to the upside. So as I said, first target's around the mid-range, which is hit there, and then ultimately you're going to be targeting range highs. That's a 1 to 3. So let's play price on. Let's see if we get there. And we don't actually get there. We don't actually get there. So, you know, it's a very, very important concept when it comes to actually taking profits. You know, you don't want to be reaching for these extremities all the time. Sometimes, you know, you may want to be taking profits off the table, say around 50%, 70% of the range. You don't want to get too greedy when it comes to trying to maximize the whole area of the range that you're trading in. Okay, so, you know, number one rule is always take profits off the table. You can see ultimately price did around a 1 to 2.4. Okay, and that's enough to start certainly scaling out of your positions. Okay, if it goes to range highs and breaks the range highs, fair enough. Okay, but we don't know if that's going to happen. Okay, but what we do know is there's a high probability that we're going to fill a large proportion of this range. Okay, and it's our job as traders to execute based on them probabilities and to take profit off the table at logical areas. Okay, so this is how you trade. This is how you trade ranging markets. You mark on your daily fractal highs and lows. You wait for the deviation at the extremities. Then you can look for a retest. You've got clear invalidation below the zone. First target you've got around mid-range. Ultimately, you can look to target range highs. But I also wanted to put this into perspective that not all trades are going to be absolute banger trades. Okay, some, as you can see here, you may have expected the range high to get filled, and that's ultimately not what happened. Okay, so that's how you trade ranging markets, and I'll see you guys in the next video. Take care. Bye-bye.